This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Hello everyone, Andy Pickering here, and we have a very good show for you today. But before we get into it, need to shout out our new sponsor, Nexo. Yes indeed, are you ready to grow your wealth with the world's leading digital assets institution, Nexo? Well, you should be ready, because you can earn up to 12% on your digital assets with Nexo's high yield savings account. That's right. So treat yourself, treat your crypto, and treat your fiat with the industry's best crypto and fiat services, which include compounding interest paid out daily. There are 18 available cryptocurrencies, including Bitcoin, Ethereum, Litecoin, various stablecoins, and many more. And 3 fiat currencies are accepted, the euro, the pound, and USD. And Nexo has up to $375 million worth of insurance across all custodial assets. Top-ups and withdrawals are available at any time, and there are 0 fees for using the Nexo Earn Suite. So, are you ready to start earning? Of course you are. Simply go to nexo.io, and of course that is spelt NEXO.io. And now it's on with the show. My guest today is Dave the Wave. Dave is a pseudo-anonymous investor, trader, and technical analyst, and most people will know who Dave is if you're on Twitter and you engage with the rough and tumble of crypto Twitter. Then Dave is probably one of the more prominent chartists, technical analysts in the Bitcoin Twitter community. He's a contrarian. He's sometimes misunderstood, but he is Dave the Wave. Welcome to the show, Dave.
G'day, Andy. How you doing?
I am doing very well. Hey, thanks for coming on the show. Look, I tweeted yesterday that I was going to be talking to you today and, invited some questions. Don't worry, we're not going to go through any of those questions. But, one of the kind of the common themes, I think, was, I guess this is one of the questions that we'll put to you, Dave, just to begin with, is, what kind of experiences or studies or philosophies have influenced your approach to technical analysis, and what is your definition of technical analysis?
Yep, okay, that's a good question. And right off the bat, I'll say that my main influence as far as market analysis goes is behavioral economics. So I'm not much interested in market efficiencies. The perspectives and that's all we have are perspectives, interpretations. I'm not much interested in any rationalization of the market or why price must do this or that. I'm very much more interested in looking at markets as a form of crowd behavior, human behavior, collective behavior, and that's where the behavioral side of things, boom and bust cycles, is a lot more appealing to me. Robert Shiller's quite good on that. His book Animal Spirits, where he looks, which goes right back to Aristotle's idea of human psychology, that we're often motivated by the emotions more than reasons. And that was what animal spirits meant to them back then. Robert Shiller and his cohorts sort of grabbed that idea and run with it, and just to sort of counterbalance a lot of the the market efficiency hypothesis side of things.
Yeah, and I mean, I think one of the I suppose, qualities that people associate with you, if it's possible to associate things with, anonymous Twitter identities. But, you appear from the outside to be quite objective and rational. And I think it's quite hard to be objective and rational on crypto Twitter, right? So, I guess the question is, how do you stay objective and rational when crypto is notoriously volatile, irrational, and emotional? And I think not just for yourself, but, put this in the context of maybe helping other people try and stay rational. How do you do it?
Well, you've got to, if you're investing or trading, you've got to have your emotions under control, and you've got to be rational. Otherwise, you're going to get yourself into all sorts of trouble. I think the foundation to it all is having a healthy dose of skepticism. And, it could all go to the moon. It could all go to zero. Who knows what the future is? But you got that sort of a skeptical outlook to begin with, and then on top of that, you think, well, okay, it probably is going to do pretty well. And if you look at the chart, long-term chart, and then you start building on top of that, but having that skepticism, you're always going to be hedged against your main view. You have a major view, which is bull run and Bitcoin, and your minor view is, well, it all turns to custard for one reason or another. So if you've got that hedged outlook, you're not going to be overinvested. And you're not going to be overinvested in terms of your money or in terms of your emotions.
Sure, that makes sense. One of the things you're best known for, Dave, is what you call the logarithmic growth curve chart. And so I suppose that this is your Bitcoin thesis. This is your kind of Bitcoin chart, and it's fascinating. You've written about this thesis on your Substack, and I think your first published piece on this thesis was back in 2018, and that's on Medium, and I'll include links to your Substack and that original Medium piece in the show notes so people can go back and read more about them if they're not already familiar with them. But yeah, so let's get into it. What's your kind of high level summary of the logarithmic growth curve?
Yeah, no, back then, 2018, that was just before the last capitulation, or just after that last capitulation from 6K down to 3K. Before then, I was interested in, an LGC as a mean of prices, but not in a technical sense as support at a lower level. And that was my aha moment. Often you'll get that eureka moment where you just look at a chart and you just see it. Different people will see different things, but for me, after that capitulation, I looked at it again. I drew the LGC, something that has to plateau at the top with explosive increases at the beginning, and the converging channel atop of that LGC, and it just seemed, just almost seemed like an obvious thing, and perfect to work as a model. I say obvious because obviously you've got to hedge against that, and in case it's pretty easy to get carried away with models. And so, it's been a working hypothesis since then. And the test of a model or a theory or a hypothesis is its performance. And it's performed pretty bloody well. It put in the support at the end of 2018. Price took off again in 2019. We had that mini parabola. I was predicting on the basis of that LGC that, it's gone up too fast, it's going to come back. Sure enough, it came back. LGC gave it support again, and hello, price took off again recently. On the way up, early I was calling, I was thinking it was going to correct, and it really took off again till, it's a full-blown parabola. It went right to the top of LGC channel, but it's corrected again. So it performed well. I've stuck with it. It could be invalidated in the future, but at the moment, I'm looking at it as the best performing model that's out there.
Yeah, interesting, Dave. And I remember a few, I guess was it May when Bitcoin, did hit those new highs of, around 64K, and it was sort of, going for about a month or so, sort of going up and down, but still right up there, right? And obviously, we talked about the emotional FOMO environment of crypto Twitter at that time. Everyone was extremely bullish, and Dave, you were one of the few guys, not so much bearish. You weren't necessarily bearish, but you were kind of calling for probably a correct. Look, I'm not going to put words in your mouth, but you were bearish at the time, right? And I think you've been proven right. What's your understanding of what happened there?
No, that's fair enough. I wouldn't call myself a bear or a bull. Being a contrarian, I'm always going to be wearing both hats at different times, depending on where we are in the market cycle and scare marks. But I was thinking price would come off pretty early on that parabolic run, because it was parabolic, and parabola is correct. But once price takes off, it's pretty hard to say where a parabola corrects. So it went right up, all the way up to, 68K? And then you had that trading range. And a lot of people were looking for that blow off top, which didn't happen.
Yes.
And yet it ran out of steam and momentum. So all the momentum indicators, besides the LGC, I use the MACD quite a lot, longer term MACD. It's packed full of information if you know how to read it. And that was screaming out on the monthly, the weekly, that things were all rolling over again. And sure enough, they came off. Now, my charts on the main page, Twitter, my BTC charts, they're for investors and hodlers, dare I say hodlers. I'm half a hodler myself, believe it or not, but they're very much directed to the longer term investor, and it's about identifying the best buying areas. And so, buying those lower points in the buy zone, you would have done pretty well. Got a bit cautious when price got high. Price is now coming back off into that where I was getting cautious. So I think price eventually, anyway, it might come off a bit more.
Yeah, well, I mean, a couple of things to dig into there, Dave. I guess firstly, some people kind of they misunderstand you as a bear, and you're not bearish at all. You're kind of on record as being long-term bullish on Bitcoin, but people just have to understand that long-term view is exactly that. It is the long-term.
Oh yeah. Yeah.
And you talk about the buy zone. So let's just talk about where you see the buy zone. And just before we do that, at the moment, what's your understanding of where Bitcoin is at the moment? Because we are sort of we're in a new range, but it is quite neutral. It's sort of halfway between the old high of 20K from December 2017 and the new high of 64K earlier this year. So where are we? What's happening?
Yeah, sure. So you can the LGC is my long-term model. On the long term, on the medium term, I've had a pattern on the chart for quite some time now, since it really come off from 63 down to 29. It went briefly into the 20s. It's been bouncing around in this trading range. I predicted pretty early on when that came off when was it? In May, that it would go sideways until August. We're into August now, and it looks like we're still in that range. I think it's going to come off. I think it'll carry on sideways. It takes time because a lot of the charting, you can look at price and put your fib levels on the chart, but a lot of it's about time also. So if you have a manic market, a parabolic market for 1, 2, 3, 4 months, 3 or 4 months, then you can expect 3 or 4 months of consolidation of that. And that wouldn't be unwinding everything. It would just be unwinding what I call the froth, or the cream on the top. And so it'll come back. This is the idea anyway. It's only TA, but it should come back. I'm thinking this year, over the course of this year, maybe fourth quarter, we could get a turnaround, maybe right through this year. But I'm still thinking, we should see price in the 20K range. I say range because I don't really want to say 20K, because it could be 21, 22, 24, who knows. But then it could also be equal. That said, there could be a capitulation spike deep into the buy zone, right? But I think it would recover pretty quickly if that did happen. And, it could even go lower. But at this point, I'm looking at low 20K range later this year.
Okay, well, that indeed would be a very good buy. I think anyone today who knows, where Bitcoin has been, that most people, that very much welcome the opportunity to buy at 20K. Although when the price does go there, it's whether you can pull the trigger or not. But I can tell you someone, Dave, who is not expecting the price to go there. And that, of course, is another pseudo-anonymous Twitter identity, that I'm talking about, Plan B here. And of course, everyone knows Plan B's stock-to-flow model. Stock-to-flow ratio is simply used to evaluate the current stock of a commodity against the flow of new production, in this case, new Bitcoin yet to be mined. Look, people know that, the stock-to-flow model has been controversial. It's been impressive so far just for being accurate to this point. Having said that, the model has quite a wide margin, right? Although, Plan B would just simply say that, the man is walking the dog, and sometimes the dog is above the line, sometimes it's below the line, right? But the point is it's kind of that upwards direction. You've had an interesting, I guess, dynamic or relationship with Plan B. You guys have gone back and forward a little bit. Please, Dave, pick up the story. LGC versus STF.
Yep, sure. Hey, but I'd just like to add before I get into that, that low 20K range is a medium-term price prediction. It's not the LGC model.
Sure.
The LGC model is a long-term price prediction. So, price could break out, or even just go sideways and then break up. But the LGC would only be invalidated if price went above 100K in the short term, say by December.
Well, that's the kind of the crux of your gentleman's bet with Plan B, right?
Yeah, pretty much, because back, I don't know, it must have been a couple of years ago, a year and a half ago, I was having a bit of a conversation back and forth with Plan B about how could it be invalidated, because we have a theory, and theories, what makes a theory and not a dogma is that it can be falsified or invalidated by some circumstances, some future price action or development. And he said, yeah, fair enough, and he came to the agreement and of 100K by December. If it's north of that price, STF is fine. My model, LGC, would be invalidated if it was north of 100K by this December. But if, on the other hand, price was not above 100K by December, then the STF model would be invalidated. And so, it's been a while. It's on the books, and there's only 4 months to go. So, thing is, it's quite close either way. Price is still quite high. So, who knows? It might be right, but I think, I personally, I think the writing's on the wall here, or on the chart, and more people are starting to see, well, it might not be realistic. and that this diminishing returns LGC might be playing out.
Yeah, and I guess my pushback to this, Dave, is that as we've seen in the past, right, you'll be only too well aware that, there are a few assets in history that are capable of moving, up or down in extremely volatile directions, as Bitcoin is, right? So if there's a serious good news, a macro bullish trigger, whether it's, we've seen the kind of the fake Amazon news or, the Tesla news from earlier this year, if those kind of triggers do happen, would it take something like that to kind of give Bitcoin the momentum to potentially break 100K? Because it's not going to do it by itself at the moment by the end of the year, is it?
Well, it's always possible, but as the chartist or someone who's practicing TA, I've got to bracket out all the news, all the fundamentals, focus on the charts, and it's a discipline, right? And it's sort of like FA is fantastic, on-chain analysis is fantastic, but it's doing something different. And it's a different sort of interpretation, it's a different methodology. And as my speciality is TA, I stick to what I know and do. And and in that sense, it's a discipline. So, yeah, I mean, Bitcoin is bubble-like. I wrote an article about that. Is Bitcoin a bubble? And yeah, I concluded it wasn't a bubble, but it is bubble-like at times. So what you get is a series of booms and busts. These exponential moves. The price is exponential, but then it corrects. So the bubble pops, and it only pops so far, and then it gathers its steam again, and then it goes exponential again, and then it pops again. So you get a series of bubbles. Now, they have been called cycles. I mean, it's the language you use is quite important, isn't it? Because it's, if you say it's a cycle, it sounds a little bit more respectable than calling it a bubble. But from a behavioral perspective, if I'm looking at markets as, crowd behavior, boom and bust, then it's those cycles are mini bubbles. You could call them mini bubbles, but in the aggregate, it's not a bubble because they are popping and correcting and then building in a sequence in the aggregate. So no, it's not. I wouldn't call Bitcoin a bubble, but it's bubble-like. Now, we've seen a massive move up off the LGC base. If I just look at my chart, we've done a 6x recently. I think once you see a parabolic rise like that, a mini bubble, or I've called it a speculative episode, a manic market, it takes a while for it to recover. So I really can't see it turning around until, this year is a correction year, and next year, who knows? All bets are off the table, and it could easily become manic again. And we've seen these cycles breaking up, whereas before we had the idea of 2 or 3 nice, clean cycles, right? 4-year cycles. Some people are talking about lengthening cycles, but in my mind, that this is breaking up into smaller episodes. So we had this 2019 mini parabola, which had me scratching my head. I thought, well, that's not looking, that's quite anomalous compared to the previous cycle. And then that was confirmed with this recent spike. So you've got something different going on. And I think the explanation for that is you've got a market that's becoming increasingly liquid and increasingly mature with more liquidity. And so you're seeing a break up of these long multi-year cycles. But back to your question, it's always possible, but I think we're going to see a few more months of correction here.
Yeah, and interesting, Dave. And look, you talk about these kind of bubbles, and another way of sort of understanding those bubbles or cycles, if you like, is, and you talk about this a lot, that a good way to understand Bitcoin is simply that Bitcoin is a nascent currency in the process of capitalization. I completely agree with that. And so if that is the case, there's going to be huge periods of volatility in both directions as new adoption waves add and subtract liquidity. And so you got to expect, you can't capitalize a new currency without volatility, right?
Yeah, well, that's right. So those speculation, and these are speculative markets, they're not predetermined by some money mechanical system. They are speculative markets, right? And you've got, it's human nature. We get you got the exuberance on the upside, and then you've got the fear and anxiety on the downside. But in the aggregate, it climbs a wall of worry, and that's a classic scenario in any long-term bull market. It climbs a wall of worry, and Bitcoin is no exception here. But I think those speculative episodes, or those mini bubbles that we're seeing, those parabolas, that's the exponential growth periods, and they correct on the logarithmic growth. So underlying that market behavior is you've got this LGC developing with a converging channel where volatility in the macro or in the cyclical is diminishing. Everything's diminishing. Returns are diminishing. The volatility is diminishing. The cycles are diminishing. There's, a good theory is both simple and elegant. And the simplicity of the LGC is diminishing right across the board. So, that's where you get your exponential growth, and they're correcting back to the LGC. The big question is how far it corrects, and I haven't got a crystal ball to tell you that.
Well, I think that's the big question, but I think the big kind of macro observation here is that I think it's quite incredible that in just 12 short years, a new form of money has been invented by an anonymous another pseudo-anonymous shadowy supercoder, and in that 12 years it is capitalized from zero to the point where no one wanted it, you couldn't give it away, to the point where the entire market cap got to 1 trillion. So quite amazing in that respect.
Yeah, totally. And I'll talk about speculative markets and manias and bubbles, but underlying all of this is there is a rational development. Like I call Bitcoin a nascent currency in the process of capitalization. So, gold has been capitalized for thousands of years, right? And Bitcoin is something that's in the process of capitalization over 2 or 3 decades, right? So you've got this explosive start, but I do think you're going to see a price discovery. You'll see a market cap, and it could very well be similar to gold's market.
It's a little bit crass to talk price targets, Dave, but everyone loves to talk price targets. That's why stock to flow is so popular with people. That's why That's why people invest. They want to see the number go up. So, what's in terms of the LGC? What does the kind of price target look like on the actual long term, which is, let's say that's mass adoption? 2 questions. What year, what time frame are we talking? And then what kind of price projections are we talking?
Okay, so I've got the LGC plateauing out, because an LGC must plateau. You'll see other indicators calling themselves an LGC out there, but they don't plateau out. I've got the plateau anywhere between 500 and 1 million, 500,000 and 1 million.
And time frame, Dave?
Time frame there, looking at the next Let me have a look. I like to look at my chart and always keep the chart open.
Of course, it's the Bible.
Yeah, you're looking at, I think within 10 years, you'll see price up there, you know.
So you're saying $500,000 US per Bitcoin in the next decade?
Yeah, a few hundred K, 500. I'm saying 500K in a decade. So
yes.
That's not too shabby, you know.
Why do people call you a bear, Dave?
Yeah, I don't know. It's the animal spirits, you know. It's sort of like that's the social media for you.
Well, in my notes, I've got, it's a famous quote from a legendary Bitcoin early developer, Hal Finney, who said in one of his early postings to, Bitcoin Talk or wherever it was, he said, most people will remember this. He said, as an amusing thought experiment, imagine that Bitcoin is successful and becomes the dominant payment system in use throughout the world. Then the total value of the currency should be equal to the total value of all the wealth in the world with, let's say, 20 million coins. That gives each coin a value of around 10 million per coin. So yeah, that was that's a thought experiment from the early days of Bitcoin. But
right. Yeah. So, it's interesting, isn't it? I think, it's serving a need. I think the digital gold idea is pretty good, right? I think it's becoming that. It's becoming a store of value once it's capitalized. And it's only, 2/3 of the way there.
That's right.
So I think that's and it's you've got all the shenanigans with the central banks. We all know about that, and money printing, yada yada yada, asset price inflation, house price inflation, and so it's serving a need, but I think the problem is it's too easy just to say hyperinflation and then write off the chart as a serious pricing mechanism, because in actual fact, we've seen inflation, but we haven't seen hyperinflation, and that is a hypothesis that is yet to be tested, or if it is yet to eventuate. So I don't think that can be sort of assumed dogmatically.
Of course. Just as we start to finish off this segment of the podcast, Dave, I wonder if just you kind of wanted to share your thoughts or philosophy on, trading alts versus, I guess, holding Bitcoin, because this is something you talk about a lot as well, and maybe it's worth just kind of getting on the record, you to clarify what you mean by that sort of trading, making the most of alts volatility, where you kind of hodl, I guess, some Bitcoin, right? Yep.
No, it's pretty much a hedging strategy of mine. If we go back to the uncertainty principle, right, we can have a decent bet on Bitcoin, but we can't assume, that there's no certainty to it. So I can stay long Bitcoin. And a way to hedge my long positions is to trade altcoins, the volatility of altcoins, because you've got two near certainties or probabilities here. It's most probable Bitcoin is going to keep doing its thing, and you'll see it go into 6 digits eventually in the next few years. But you've also got the most probable other idea here is volatility. So it's going to be volatile. So what you can do is trade that volatility, right, to the down, to the up, to the down, to the up, against your long position in Bitcoin or major alts like Ethereum, whatever, or both. I've got Bitcoin, I've got a few alts, major alts, long positions. And then where most people have, if you're going to hedge your crypto longs, you want to be trading that volatility against USD, right? Because Bitcoin and the altcoins, they're going to move together. Your alt USD volatility is going to be much more than your alt BTC volatility. So what you're doing is you're trading those alts for shock horror USD, right? USD is not toilet paper. Hyperinflation is not a dogma, right?
Yeah.
I'm pretty sure it's going to be damn volatile, right? Yeah. So I can trade the alts for USD, and I can double, triple, whatever my USD while I'm still long crypto, and that's the perfect hedge. To me, when I saw the LGC for the first time, I also thought, well, the way to hedge this is through trading alts, which is something I do. You know, the Bitcoin charts on the main page, they're really more for the investor, but you get a lot of traders sort of, this creates a little bit of the confusion at times, because I'm not trading it. I'm just, this is a disinterested chart.
Well, on that then, Dave, here's a question for you. So you're exactly right in pointing out that, you know, your charts, your Bitcoin charts are for the long-term investor. If that's the case, let's say, I'm not asking for financial advice here, Dave, but let's say hypothetically, you've got a new entry and they have a long-term investment thesis in mind. What's the best strategy for them? Is it like a slow and steady dollar cost average approach, or should they be looking for a price to hit your buy zone? What happens if that doesn't happen? What would their best strategy be? Yeah,
it's something I more look at on my trading page, you know, because you've got to look for good prices, but at the same time, you can't look for perfection, because, you know, there's risk to the downside, but then there's a lot of risk to the upside, because if this market all takes off again, right? So you got to be flexible with it, and I think, if you know, my strategy for the alts could apply to Bitcoin also. So what I would say is people want to have some what I call a low ball bid at the buy zone. And I would say I've identified quite a generous 20K as actually the top of the buy zone. And I think that would be it might not get hit, but there would certainly be a spot to put in a cheeky lowball offer, right? And who knows, on a capitulation, it may get hit. And they're the kind of buys you want. Yeah. And then you might have another buy a bit higher, 22K, 23K. And then you might have another, what I call a breakout bid on that diagonal that I have on my chart, right? From the peak to the buy zone, and wait for that to be broken, so you could buy the breakout. So you could buy in a few tranches, but the key here is patience. You know, and this is, you know, most people become quite impatient once the price takes off. Like we've just seen that this week, right? The price took off, and people will chase the price. So you get the classic FOMO happen. So, I mean, if anyone's overly anxious, they should, you know, why not buy a little bit if they're really anxious. It's the same situation if they're long a lot of Bitcoin and they're anxious, why not sell a bit? Because you got to manage that side of things. But I think the main factor should be the TA, and where you would, you know, you'd look at a chart and you'd say, well, actually, I don't really need to think about buying until price broke this range or broke out of this downward diagonal. And that's what TA is all about, right? Yeah.
Very well said, Dave. All right, last thing I want to discuss here before we go to a break, and I'm quite excited to do the very famous Crypto Conversation hot take round with you, Dave. But before we do that, I want to give a little cheeky shout out here to the brave new coin, Bitcoin Liquid Index, or as we call it in-house here at Brave New Coin, the BLX. So anyone who follows your charts on TradingView, Dave, or indeed follows Josh, lead analyst here at BNC, Josh's charts on TradingView, And a lot of other chartists as well. They use the BNC Bitcoin Liquid Index. And so I don't know if you sort of had connected those dots, Dave, but yeah, just any impressions as a TA guy on using that to chart?
No, the BLX is my favorite index, right? And it gives you an aggregate of the other exchanges, I believe.
Correct.
Right?
Correct.
Yep. And you've got price right back to pre-2011. Fantastic. So I do all my long-term charting on the BLX, and I keep all my TA on that. And then for the shorter term, I tend to use something like Bitstamp or one of the other ones. So I've got a Bitstamp for my shorter, medium-term charts where I keep all my TA on it. And for sure the BLX is definitely my favorite chart, that one for sure.
Yeah, and it goes back to, in terms of price history, it actually provides Bitcoin price history back to the beginning of trading on Mt. Gox in early 2010. So, that's kind of really where Bitcoin trading actually did begin. I just wanted to get a little plug in for the BLX there, because I always enjoy seeing that on your charts, Dave. All right. Well, let's go to a very quick break, and then we'll come back and we'll have some fun. We'll finish off with the very famous Crypto Conversation Hot Take Round.
Grow your wealth with the world's leading digital assets institution, Nexo. Earn up to 12% on your digital assets with Nexo's high yield savings account. Treat yourself, your crypto and fiat with the industry best crypto and fiat services, featuring compounding interest paid out daily, 18 available cryptocurrencies, Bitcoin, Ethereum, Litecoin, stablecoins, and more. 3 fiat currencies are accepted: Euro, Pounds, and USD. Up to 375 million insurance on all custodial assets, top-ups and withdrawals available at any time, and 0 fees for using Nexo Earn Suite. Start earning at nexo.io. That's nexo.io.
All right, we're back, and I'm with Dave the Wave. Dave, of course, is the very famous but very anonymous investor, trader, technical analyst, and Twitter contrarian. He's slightly cranky, often misunderstood, but he is Dave the Wave. Dave, I like to finish each Crypto Conversation podcast with a quick round, rapid fire Crypto Conversation hot takes. Are you up for it?
Yep.
All right, Dave, here we go. Dave, where would you say that you sit on the Bitcoin maximalist to multi-coin opportunist spectrum?
In the middle. I'm very much a middle person.
On the fence?
Well, no, I wouldn't say on the fence, because on the fence means undecided.
That's right.
And you can't decide which way to go. But everything. How quick are these answers supposed to be?
Oh, just like this, Dave. Just have fun with it.
No, I consider myself a centrist when it comes to Bitcoin, not a maximalist, because I find I cannot buy into the ideology. I'm a pragmatist, but I'm very much a centrist with Bitcoin. You've got to have your core Bitcoin, and then you can speculate in the others.
Makes a lot of sense to me. Okay, well, Dave, what would you say is your firmest conviction, a crypto opinion?
No convictions, completely pragmatist. The only conviction I have is that we could all be terribly wrong. And so you've got to diversify, hedge, and make sure you get some of those profits into real assets.
Spoken like a true contrarian. Excellent advice, Dave. Well, look, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. So look, whatever you like here, what is blockchain, Bitcoin, the world, what does it look like in 10 years' time?
Well, I think the long-term time frame always trumps the short term. It's human nature to be short-termist. but it's rational to have a longer term, because the longer term works out a lot better than the shorter term. I guess the whole space develops, crypto space, the good and the bad, carries on with what it's doing. And I think you'll see Bitcoin capitalized, and dare I say it, eventually it could become a stable coin or a store of value, where I don't think it's going to it will complement things like gold, and other stores of value. I don't necessarily think the wealth of the world has to be sucked up into Bitcoin solely.
All right, let's have a little bit on TA, Dave. What's something most people don't know or are unaware of when it comes to technical analysis?
Real values as opposed to nominal values.
What does that mean?
Well, it's so volatile, crypto, it needs to be charted on a logarithmic scale, right? If it's on the arithmetic scale, that's nominal increases, 1 + 1 + 1. Logarithmic, the vertical scale is geometrically organized. It goes up in terms of multiplication. And they are your real values you should be measuring with your fibs, fib retracements. That most people are thinking in terms solely of price, like percentage decline off the peak price, and a lot of the time that's irrelevant, because if you have something move, say you have something move 1,000%, right, up, it goes up 10x, and then it comes down off the top, it might come down 80, 90%, but that might only be 50% of that initial move in geometric or logarithmic terms or real terms. I mean, it's a real hard one to explain this. I mean, I've tried. It's probably better for an article, and I have written articles on this.
That's right. It's just math, Dave. Okay, well, put another way then. What's the most underrated indicator in charting and TA?
The MACD, because the MACD is packed full of information. A lot of people will use the RSI, but you can actually use what you get with the RSI, you also get with the MACD. So the MACD can show you when it's oversold, undersold. It also gives you momentum. It shows you the change of pace and momentum. It shows you where those moving averages, which the MACD is, are above or below the zero line. It's just packed full of information. But once again, this needs to be put on the logarithmic scale.
Yes.
Because a normal conventional MACD, just like a conventional fib retracement, it's based on nominal values, and they don't work. This is a bit complicated, something I go into further on articles, and I might even look at doing some videos on that in the future.
Yeah, absolutely. It's a hard one to talk about, but okay, well, here you can have some fun with this one. What's the most overrated indicator?
I don't know. What do you think?
I want to say Elliott wave theory.
Okay, yeah, I'd agree with that one. I mean, I once again, I'm sort of I mean, how can I not like Elliott wave being a wave, right? But I don't like the overly technical aspect of it, like the 1, 2, 3, 4, 5, 1, 2, 3, and that. But the basic idea behind it, because it's also looking at behavioural economics, right? You get this wave up and wave down, and I think the general idea I very much buy into, but the technicalities of it, the overly technical nature of it, I can't go the full way with it.
Well, speaking of Elliott waves and waves, and you are the Dave the Wave. So Dave the Wave, where does the Dave the Wave identity come from? And, you know, as the kind of the picture of your Twitter identity, you're using the very famous Under the Wave by the Japanese artist. So yeah, where does that all come from?
Oh, it just seems appropriate. I like the idea of the flux, everything being in flux, and I love the ocean. I've got a appreciation for classical culture, the older Mediterranean, Greek, Roman culture. So, you know, being around water, flux as opposed to everything being tied down and rationalized. And also that print was very ominous print. It was very, you know, like at the time when it was, you know, it sort of struck a nerve with a lot of people, that print, and, you know, this impending doom, this crash that was about to overcome the world, you know. So I've always had a liking for that print. And I don't know, Dave the Wave, yep, and here's a wave, and just banged it on.
All right, we're almost done here, Dave, but speaking of impending doom, or, you know, a wave of destruction, time to zoom out, time to get a little bit weird. What do you see as the long-term future for the human race? Do you see dystopia or utopia?
Sure. I'm a bit pessimistic about things. The general idiocy levels tend to be rising. So I think we might have peaked out at somewhere along the line. So, you know, I think we're, in certain respects, our culture is decaying, but our civilization, that said, our civilization is really ramping up. And so I think the technology and the side of things are going to increase, and freedom will become more abstract. You know, it's a set of ideas rattling around in people's heads, as opposed to what does it mean to be free in a practical sense in real life. So yeah, you know, a little bit pessimistic as far as the wider cultural scene goes, but you know, neither a pessimist nor an optimist be, right? So I'm always realistic. If anything, I'm very much realistic, and you just got to, you know, take the good with the bad, make the best of things.
100%. All right. Well, let's finish this off, Dave. What is your favorite science fiction book, film, show, or universe?
Book, Brave New World.
Yes.
And I like Truman Show. You know,
fantastic.
That's a great metaphor for people getting lost in the inside their little bubble.
Did you know that A Brave New World by Mr. Huxley was the inspiration for the company name Brave New Coin?
Oh, there you go. That doesn't surprise me. I kind of suspected that.
Yes.
Yeah. Anyway, I'll leave it there. No, it's all good. Yeah.
No, I'm curious, what were you going to say?
Oh, I was going to say that I have my claim to fame there is my parents ripped up. I brought that book home from primary school, and my parents proceeded to rip it up and burn it because they were going through a puritanical phase at that time. So it's it bemused me at the time, and so that's why it's always how I've had a soft spot for it.
Wow.
Yeah. Hilarious, isn't it?
Yes, yes.
So that was the way that they managed to turn me into a bit of a bibliophile after that.
Oh, because they were book burners.
Yeah. I thought, it's your stuff here. I'm going to bloody keep reading books. Yeah, there you go. But no, beautiful parents. Can't compare.
Yes.
Yeah.
All right. This has been a lot of fun, Dave. Thank you so much for your time. Really appreciate you.
Likewise.
Really appreciate you coming on the show. Look, please finish this off by telling the people where they can go to find you on Twitter, your Substack, your alts trading Twitter account, anything you want to point people to, please feel free to do so.
Okay, so it's pretty simple. Twitter accounts at Dave the Wave. There's no E in Dave, so it's Dave the Wave. And if you click on my profile, you'll be able to see where my articles are on the Substack, and also you'll be able to see information about the alts page where I'm trading alts and doing trying to do, 5 or 6 charts a day on there, and actively trading and doing pretty well on that side at the moment. So yeah, that's where you can find me, Dave the Wave on Twitter.
Awesome. All right. Well, we'll just have to see how the rest of the year plays out. That's what really one of the fascinating narratives between now and the end of the year is really, again, your charts, the LGC against stock to flow. So I guess maybe, yeah. We'll do this.
We should know by Christmas, right? Or by December.
Exactly right.
And simple, objective, and one way or the other. We'll soon know what's happening.
Can't wait to see what happens. All right. All the best and bye for now. Thanks, Dave.
Okay. See you, Andy. Bye-bye.
All right. Well, there you go. The elusive Dave the Wave. Hope you did enjoy that. Yeah, I enjoyed talking to Dave. Did we do a good job of explaining Dave's logarithmic growth curve? It's quite hard to explain just on audio without the benefit of a chart. So, if you are interested in digging into it, do recommend you either, go to Dave's Twitter. He's posting, variations on all different time frames all the time, or go to a Substack, and he has a few different articles. Has quite a lot of really good articles actually, but yeah, a couple of specific ones that explain the logarithmic growth curve. But it's kind of like, how everything in life follows a growth curve, right? Whether it's logarithmic or exponential. So I think the idea with Dave's chart is, there's exponential growth happens in the beginning, and then it begins to taper off towards a plateau. Just so the idea is the more people that adopt and use Bitcoin as it kind of heads along the adoption curve, then the gains, there's diminishing returns slowly over time. It's not to say that Bitcoin won't appreciate sharply, because it still will, according to these charts and projections. It's just that, the kind of the exponential 10x's, 100x's, all that happens at the beginning, and then things will still keep appreciating. It will just take a little bit longer. Man, am I explaining this well? I'm not sure. I hope so. It's just, because if you imagine, you can't have a straight line, right? Imagine on a chart and you had a straight line up and to the right. Where's that line going to go? It just goes to infinity. So yeah, I guess the idea with the logarithmic growth curve is to account for that sort of stuff. But again, don't take it from me. Go and read Dave's articles. He even has a YouTube, I think, a couple of videos on it. So I'll try and find out all of that stuff and put it in the show notes. All right. Congrats on making it to the end of the show. Thank you for listening. Please do subscribe to the Crypto Conversation podcast so you know when each new weekly episode, or a couple of episodes a week. If you subscribe, you'll know when each new episode drops. And also, please do feel free to give us a nice review or rating in Apple iTunes or the Apple Podcast app, or wherever you listen to your podcasts. All right, team, that's it really. Thanks again for listening. Thanks to Dave the Wave. This was the Crypto Conversation for Brave and You.